Brijen, good having you, and thanks so much for waiting by a bit patiently. What's the call? We had our currency editor a while back, and she was saying that with whatever has been done in the last couple of days by the government, the whisper numbers of 65, 66 to a dollar are slowly receding. People are still talking about nervousness and weakness, but at least not the levels that were being spoken about earlier. What have you made of the last 7 days, the volatility, the government action, and the resultant impact thereof?
See, I think what has been announced is really short-term measures to ensure that some of the froth that had built up in the market goes off. So the expectations of rupee depreciation had kind of gotten a little bit unhinged, and a long dollar rupee had kind of become a consensus play, and hence the very sharp move up into the 60 and almost 61 zone. I think what the authorities want to ensure is that the rupee doesn't get unhinged from fundamentals. Having said that, the fundamentals do remain weak, and unless we handle the issues around the current account as well as the financing of the current account, really the depreciating bias on the rupee would remain in the medium term. But yes, talks about a rupee a weak depreciation have definitely receded a little bit, like you mentioned. But we need to follow this up with more action.
Brijen, afternoon. Avan joining in. Now, what's pertinent to note is that the fall of the rupee has not been in isolation. It has been across the board, with most of the other emerging market currencies also falling, and this since May. But would you be worried that in the medium term, the fall of the rupee vis-a-vis some of the other emerging market currencies is likely to be more severe?
So I think we need to divide the emerging market basket also into two. One is the current account surplus emerging markets, and second is the current account deficit emerging markets. And really, like you mentioned, the rupee has moved in kind of tandem with the current account deficit emerging markets, and would probably continue to do so. I think depending on the US action around tapering, whether it's September or December or as and when it comes, there will be further pressure on these deficit emerging markets, really to ensure that they can find sources of funding. So the bias, therefore, would continue for the entire current account deficit basket as a whole.
Brijen, a couple of factors which have been announced, and the market opinion is divided whether these have been factored in or no. The food security bill, and while we didn't see any impact on the rupee the day after it was announced, a couple of days later a bit of a slam dunk. Do you think, when we're talking about CAD and the deficit and the fact that another 25,000 crores of a hole because of this food security bill, has that been factored in?
So I think the food security bill is something which had been indicated and accounted for partially in the budget itself. So it was more a question of timing. And given the elections looming, really this was the 3 to 4 month window that the government could come up with. So in terms of the fact that it's come in, not a surprise. The timing, maybe a little bit. From a pricing in perspective, I think some part of it has already been priced into the markets. What really needs to be seen is what is going to be the eventual fiscal impact down the road, because even though not directly impacting the currency, but through the fiscal route, and therefore the sentiment on the country, it would impact the currency. But on an rather ceteris paribus, I don't think the food security bill in isolation had as much of an impact as everything put together.
And as we speak, also the currency is at the day's low. Maybe we have slipped below 59 over the last 3 days very fleetingly, but that level of 60 has just not eluded us at 60.19 almost for the currency on last count. But Brijen, just wanted to talk about the impact of the currency depreciation on the monetary policy decision, because even some of the developed countries, like for example the Australian Central Bank, it held its rates on account of a 10% depreciation in the currency. Do you think that that's likely to be a similar case for our own central bank as well?
Yes, I do think so. Prior to this bout of depreciation starting, people had factored in July rate cut. I think that's definitely off the table. In fact, for now, unless we see some stability in the currency and both global and local factors, I think the market will probably be very wary about pricing in future rate cuts. Having said that, growth is definitely an issue. Inflation, while there will be an impact of the rupee depreciation, it's not the same problem that it was earlier. So it's a fine balance, but unless and until we can control, rather be surer about the currency, I think rate cuts would definitely be off the table. Additionally, if the currency comes under additional pressure, we could see the Reserve Bank looking to possibly tighten liquidity. It's not something which is an easy decision given the growth dynamics, but maybe something which would be required to be done should the situation get out of hand.
Brijen, the other bit would be that I was speaking to a few people and they said that more than the currency, yes, of course, that's been in focus. But I think the bigger problem, according to them, is what crude has started to do. I mean, we were anyways paying more than we've ever paid even when crude was at 150. Do you think that's the key monitorable right now? Because we're talking about gold imports falling, but with what the currency and crude are doing, our numbers, the deficit numbers will look worse than what they have looked for the month of April and May.
Yes, it's a double whammy. So while the rupee has been depreciating, crude also we've seen the crude prices inch up on the geopolitical worries, and that does make the situation worse than what it would have been without it moving up.
Just one last word with respect to, yes, we spoke of some short-term moves which have been taken by SEBI, by the NSE, by the RBI, but of course they have not been enough. What is it that you would like to see, and where do you see the currency in the long term settling?
Well, I would think that really what needs to be tackled is either some issues around the current account, which is looking at our imports. So really something which tackles the ore or fertilizer imports, and that is something which would impact the current account. On the capital account, really, while we can keep looking at additional sources of funding, easing capital inflows, but really the solution lies in reducing our dependence, not increasing our dependence there. So I think that is what we would like to see. Also, maybe some more move in fuel prices. Politically, very difficult to do, but that is something which would at least give confidence to the market as well as the rating agencies that the government is looking at the situation and willing to bite the bullet when the hard decisions need to be made. So having said that, I would think those are very difficult decisions, and therefore whatever measures we may see, administrative measures like the ones we've seen over the past couple of days, while they may provide some short-term relief, medium term it would be difficult to push the rupee down materially. So I would think in the coming month or so, maybe 58.5, 59 is where the dollar rupee will find difficult to break on the downside, and on the top side probably 61.5, 62 is probably where we would see it getting capped for the short term.
We'll leave it at that. It's been a pleasure chatting with you. Thanks very much, Brijen, for joining in and giving us your perspective on where the currency is headed.